Welcome to the Big Dawg Crypto Podcast. This is your number one crypto podcast to hear directly from the movers and shakers, innovators, and disruptors in the cryptocurrency industry. Follow on Twitter for updates and to communicate directly at Woof Big Dawg. That's at Woof Big DAWG. Now, here is your host, the one and only Big Dawg Crypto.
And welcome to the latest episode of the Big Dawg Crypto Podcast. I'm your host, Big Dawg Crypto. This guy I have been trying to get on for a while. If you've been on Twitter, you've been on crypto Twitter, literally one of the best analysis I've seen. I always say follow people that give you good information. And this guy, I rank him near the top. Very, very happy to have him on. Michaël van de Poppe. Did I get your name right?
Yes, you did. Thank you for the introduction, man. I'm happy to be on the show.
Man, look, I appreciate it. Let's get right into it. I know you're super busy, and what a week to have you on. Monday, Tuesday, we had all the stuff going on with the Binance and the Coinbase situations. You are a technical analyst. When you look at this stuff, and I always like to ask anybody in TA, and you have fundamental analysis. Let me just get right into it. How does this affect your charting when you look at Bitcoin and you look at the markets?
Well, honestly, I was when I woke up on Monday, I was like, hey, this is going to be a relaxing week. There's not much of macroeconomic events taking place. Right. Next week, it's going to be CPI and Fed, so it's going to be hectic. But hey, the US wanted to get the spotlight again. So the SEC came in and we got the case against Binance. We've got the case against Coinbase. Mm-hmm. The thing is that this is very much news driven. So anybody having a position in the markets got screwed anyway. Right. So I've been initially hit on the move as well, because the new news comes out and then the price just falls immediately. We saw it happening as open interest was rallying quite heavily. Also on Binance, some positions were filled and some people were saying, what's happening over there? So there was some certain inside info, but it makes trading a little bit more difficult during these events because it's just simply news driven, and that is that's not really the market environment that I really enjoy, I would say.
It's interesting you say that, because the first week of June, it's going to be a mellow week, and you're right. It was like a 1-2 punch on this. People looking at Bitcoin, and I've said before, there's a lot of people that will tune into the show that are new. Okay, people that joined in the end of 2021. So obviously, a lot of those people, I get messages about it, and I'm sure you do too. Hey, I bought at 65. I bought at 69. Am I in a situation where it's not ever going to come back? I mean, obviously, I think we all believe it will, but from a TA point of view, and I think this is so important as the halving's coming up, right, in less than a year, what would you tell them when you're looking at charts to look at as far as technical analysis?
I would tell them to hold. I think if you are having the blessing of buying Bitcoin so high in the bull cycle and you're still holding on to it, you're a winner. Because if your first buy is that high, you're making the beginner mistake everybody makes, but you do it at the beginning. Right. So you're doing a good job. If people are starting in these markets and are going to have a bull cycle after that, they will experience having a ton of money and then lose it all again. But you will be understanding that this happens when a cycle ends, so you probably are going to take measures for it. Right. If you're looking at the markets right now, I think what you should be doing if you're investing into Bitcoin since 2021 is to look at previous cycles. And yes, of course, we've got macroeconomics. We've got all sorts of things that is essentially just noise that is influencing the markets. But markets repeat themselves regardless of what's happening. So in that case, look at the cycle in 2015, 2016, 2017. Look at the cycle what took place before 2021. And you can see that right now we are in a nature where the markets are consolidating. It's boring. People start to lose their trust into the asset because the asset is not really falling down in price, but it's going sideways. So the time is actually a killer. It's draining your motivation and your energy. And if you start to see what's been happening in the previous cycles, you know what's going to happen after, especially with the halving coming up. And you start to understand why the concept of dollar cost averaging is so important to apply to your investment thesis. If you are holding since 60K or since high numbers, this is the period where you want to accumulate. Especially if you have been going through the previous cycles, then this is the period where you want to start building your position.
So let me ask you this. I always like to ask my guests because I'm interested, when you first heard about Bitcoin, because you've been in the space a while. I know I followed your account for quite a while. But when you first heard about Bitcoin, do you remember like where you were, who told you about it? Like the first time you ever heard about it?
Yeah, actually, I was studying economics in Amsterdam, and there were a few times during class that some guys were saying, "Hey, you have to check Bitcoin," and it was December 2016, January 2017, and then my best friend told me when we were drinking some beers that I had to check CoinMarketCap, and that was February 2017. So the good old altcoins were doing really well back in the day.
Right.
The exact same day, I bought my Digibyte and I started reading about crypto, and I thought, this is it. So I remember it. I remember that I've been buying, Ether for like 50, 60 bucks and Bitcoin under 1K and Digibyte for a great price. And that went like 4x within a week. Yeah. And then lost it all after that again. So yeah, I do remember it. And I think I'm pretty thankful for my friend to be mentioning crypto.
I haven't heard Digibyte for a while. You're definitely an OG.
Yeah.
It's like the class of 17.
Said, back in the day, I used to buy it on a small exchange, which was called Lightbit. And now due to all the regulations, all those small exchanges are getting either taken over or they're just going bankrupt. Right. So Lightbit is now gone as well. So it feels a little bit like, oh, that's sad.
I've never said this before, but maybe there's a test for like, there's always like funny, like OGs, like whatever year that is, who knows, right? Some of us have been for a while, so maybe not so long. But it's like, do you know Cryptopia, what that means? Yes or no, right? If you know, yes, you're an OG.
Cryptopia and stuff. Yeah, that was great.
Yeah.
ETH Delta had a bug in the system that if you put in an order, you filled in 102 less, it just took the order from that level in the order book. It just skipped the rest. It was amazing. Good old times.
Interesting times. So for people that are trading, there's a lot of people obviously that try and day trade. And then I think I've had, you ask people, and that's usually kind of a challenging thing to do, right? It just depends. But, more often than not, people have losses maybe as opposed to wins. For people that are day trading, what sort of time frames, what sort of candles? Are you a 15-minute guy, 4 hour? I mean, let's just say somebody's going, I'm just giving an example, right? From 9 to 5, they want to try and day trade. What candles, what sort of indicators would you advise or suggest that they may want to pay attention to?
I think if you really want to be a day trader, it doesn't even matter. If you want to be a scalp trader, day trader, swing trader, you start with the higher time frame picture. Yeah. So even if you're going to be focused on a 5 minute, 15 minutes, you want to have intraday scalps, you need to have the higher time frame picture to see where the markets are standing. So then you can go through a top-down analysis. Yeah. In that case, I used to be a swing trader. I still am, which means that I'm holding positions for a longer time frame. But in the current market circumstances where you see Bitcoin just going into a range for 2 months, I'm mostly just looking at intraday trades. I don't want to have positions overnight. So I define my entry from 1 hour, 4 hour, and I optimize it through 5 minutes and 15 minutes. And then I'll just play it out. If it's going to be during the night and I have to sleep and I have to carry a position overnight, I put it break even, go to bed and just relax. Because as we have just briefly touched, the markets are so uncertain and fragile, which means that one news topic can move the markets away you don't want it to. Right. And what happens during those news events is that people flip-flop their bias quite often. So what can you do during that period is that you either zoom in a lot, which means that you're scalping during the day, or you zoom out and you invest and you accumulate and you're just sitting back and just chill out. I think I'm doing both because the middle one of having positions for 1 to 2 months is quite tricky at this point yet. So then you have to zoom in and you have to zoom out.
That's interesting because that's one of the things that people always ask about. And then the other thing too is that volume precedes price. Is that accurate, or what is your take on that?
I think, in some way it does, but I think that ultimately if price moves to a certain point, volume comes in as always.
Right.
So you in order to have volume being created, you always need, except for news events. News events can push the trigger and then it's just volume and price follows through. But if you have a technical way of a breakout or anything else, it is always price moving first, and then the volume kicks in. So, for instance, we've had the crash on the markets a few days ago with the sue against Binance. You see price starts to fall, and then it goes beneath certain important levels to grab the liquidity there. The liquidity is grabbed because those long positions are forced to close through a sell position, through a short. That is enough liquidity to reverse the market. So in that way, the volume comes in, and then price just follows through.
You know, one other interesting thing too is that, you know, you've been in the space a long time, you know, I've watched stuff for a long time, and it just seems like lately, or let's say in the past year or so, year and a half, suddenly all of crypto Twitter, right? Twitter's talking about CPI or talking about the Fed. And of course, you know, you really analyze that a lot too. How would you say with the Fed and the interest rates? Because, you know, it's kind of be, let me say, a two-part question here. A lot of times we want to say, let's say Bitcoin is a non-correlated asset, you know, and then of course that's changed. Is it not? So I'd kind of say with the Fed rate and whatnot, and looking at crypto, how would you explain it? But how would you say that's kind of coming to more play now, right? Because you're seeing that more and more over the past year. I mean, do you really feel that is affecting the markets a lot? Because it seems to be. But to what extent, and how do you look at that when you're doing your analysis? And that's kind of a wide-ranging question, but what are your thoughts on that with the Fed? You know,
I think ultimately, the past 1.5 years, we've seen that the Fed and the strength of the dollar has had its impact on Bitcoin. Right. Ultimately, if you think about it, you come to the conclusion that crypto becomes a larger player in the global ecosystem of finance or the financial world, which means that all those macroeconomic factors are having its impact on crypto as a whole. But you also come to the conclusion that prior to 2021, the impact was there already, but we just simply didn't focus on it. So if you go back in time, a weak dollar, a strong dollar, were also during the periods that Bitcoin had a bull bear cycle. If you go back in 2017, the dollar was super weak. If you go back into 2018, the dollar was strong. So the impact was there already. However, it's more visible right now as more people are paying attention to it. And because more people are paying attention to it, the markets are moving because of it. So that's what we have been seeing in the past 1.5 to 2 years, which is that the dollar is showing strength. The Fed has its quantitative tightening policy, through which risk-on assets are not doing really well. Right now, we're getting into the end stage of quantitative tightening, which means if you look at it from a historical perspective, that if the Fed stops or pauses its entire policy, that's usually a moment where there is relief on the markets and risk-on assets start to do really well. I'm not saying a pivot is beneficial, because a pivot is usually out of fear or out of an economy that is doing bad in terms of high unemployment or weak economic numbers, or that is usually a moment when the recession really kicks in. So you don't want to have that. But as long as we have a window where the rate hikes are getting to its end or pause, that is when a new run can start or a new takeoff can happen. However, the question forward looking is going to be, is Bitcoin going to move with gold, or are we going to move with stocks?
Right.
That is going to be the crucial question if there is going to be a recession or crisis going to take place.
Would you want to put a guess on that? I mean, a guesstimate, obviously we can't tell the future, but do you have thoughts on that, what you think may happen?
I think it's a difficult one, because if there is going to be a crisis, of course, it's super difficult, and it's all just, I don't know. My best guess, if you look back at what we saw in March, we saw 6 banks collapsing, and the one class or one group of assets that did do really well during that period was Bitcoin and crypto. Because of uncertainties of the financial system, so people fly towards another asset. And I think if you go back in time, if you look at the most obvious example that's comparable to the current markets is 1929. What did do really well after that? It was gold, because people simply didn't believe in the governments anymore. And as much as we want to have trust in our governments, but once we start to lose that in a crisis, that's when people start to adopt towards decentralization and into crypto. So initially, if there's going to be a crisis, I think Bitcoin will lose value, just like we saw in March. But that's just a liquidity crunch because big investors need to rebalance their positions. And that's when they sell off their high risk part of their portfolio, which is Bitcoin, which initially crashes. And then it bounces back to the heaviest way, just like gold has been doing in the 1930s. So my best guess is that we should be looking at the combo of gold and Bitcoin and not solely onto indices.
I'm going to put that with the next question, because when it comes to, like, I'm asking you to predict the future, right? We don't know. I always tell somebody, if you're asking me a prediction, right? Can you guarantee it? Well, I'll take my prediction of $5. I guarantee you can get a cup of coffee, right? So we don't know, and I'm asking that. So I'm gonna take to a second one. Having coming up March, April of next year. Do you want to gander a guess? Do you want to speculate? Once again, we're making a prediction. We don't know. But if somebody said to you, what do you think, right? It may range, let's say in 2015 or 2025, okay? 24, 25. Do you want to guess? I'm going to say, does Bitcoin, in your opinion, in your guess, right, surpass all-time high? And if so, what does the top out as? And once again, we don't know, but any thoughts on that?
Ultimately, it's a best guess, and I think,
sure.
The answer will be different parts. The first part is, if you put Bitcoin into a valuation against the US dollar, it doesn't really matter what the value in dollar is. It is how much you can buy with it.
Right.
So, as an example, if Bitcoin is going to be valued at $1 million and one glass of cola is $10.
Yes.
If your Bitcoin is valued at 2 million and the glass of cola is $20, it doesn't really make much sense, because you can buy the exact same amount of goods.
Right.
That would mean that the entire economy is destroyed. But anyway, the point is that it's about how much you can buy with it. So I think that we're facing a cycle that is going to be comparable to the dot-com bubble, which is comparable to the dot-com bubble in terms of regulation, which we got then too, and in terms of adoption. So it goes into the acceleration of adoption, through which more and more people jump into crypto. I think that's really, we are into 1998 of crypto, I would say. Then if you think about valuations, the dot-com bubble was between 10 to 15 trillion. Compounded with inflation, it's about 30 trillion, but I think that's a little bit too high. I think that going into a valuation of 10 to 15 trillion, with Bitcoin being into a market cap of around 6 trillion, makes a lot of sense for the next bull to be into a bubble, combo of the adoption, combination of the value of gold. So best guess, I would say that the next peak is going to be between $225,000 to $400,000, depending on how fast the wick will be.
Right.
Going into the halving, I think we'll trade higher. Right now, we are on a very important level and on a key point. I think that Bitcoin really needs to hold here in terms of not dropping beneath 25K, because then we are into bad waters and having a very long accumulation again. But if we do hold here, I think that we're still very undervalued. We have had a rough year, which means that if we go into the halving, we probably have another run. So I think around the halving, trading between 34 to 42K makes a lot of sense, to me at least. And I think people should understand that the valuation of Bitcoin right now is still really low.
Right.
So that's how I look at the markets. And I think that we can still have one relatively easy peak bull. And after that, it will just take more time to go back into that bull cycle, because there's just more money needed.
Right. I can agree with that. One other thing too on trading, 200-week moving average. You talk about that a lot. Why do you feel that that's important?
I think the 200-week moving averages is coming from the traditional finance. Trading above it and trading beneath it usually defines bull and bear markets. And because literally all the traditional traders are looking at that specific indicator, is a self-fulfilling prophecy, so that works. In this case, I'm looking at the 200-week MA, because also in the previous parts for the cycle of crypto, it is always defining bull and bear markets. I'm not looking at Bitcoin specific, because I understand that the crypto markets is not solely about Bitcoin. Some group of Bitcoin maxis say it is. I don't believe it is. And I'm looking at the total market cap, because it's just a cleaner chart. It did not go beneath the 2017 peak. So it actually gave a beautiful retest. And now it's testing the 200-week MA and 200-week EMA, which it also been doing in previous cycles and always held. So that's why it's a crucial point right now. If we sustain above it, and next week we've got a relatively soft CPI and the Fed says, hey, we're done, I think this could be the low. On the other hand, if we fall through it, then you can see the market crash for 30% again. So that's the flip side. But this is a pivot in the markets, and that's defined by the 200-week MA of the total market cap.
So we're definitely in interesting times. There's no doubt about that. So look, I appreciate your time. A couple of last questions. I always like to ask a couple of personal things. When you're not working and you put out a lot of content, you do a lot of stuff, you're always on. What sort of hobbies, what sort of stuff do you like to do to kind of unwind?
I started boxing, so I'm doing that. I've started playing golf, so I'm going to be a lot on. I've seen the news about Live Golf and PGA, so maybe you'll spot me at some tournaments just to watch. I would love to play, but it's too difficult. And I'm watching football and sports. That's what I do. But mostly nowadays, just weightlifting, boxing, golfing, trying to be out there.
Nice. And then favorite food, what's one or two of your favorite foods? If you're going to a restaurant tonight, you're going to order, what's your favorite thing?
I love a good steak. Okay. So if you bring me some good steak, I'll be very happy. And otherwise, I also enjoy sushi. Those are the two things, but mostly a good steak with a beer. I'm satisfied.
I can appreciate that. Okay, so let's let people know where to find you, and also a trading group. I always like to find out people that are putting out content. Your trading group, what is it, and what's the best way to find you and connect?
The trading group is essentially educational, which is that we provide background on macroeconomics, but also the trading strategies that we do. You can see my portfolio and from other traders as well. We provide you with trade IDs. It's called MN Trading, which you can find on my Twitter profile, which is Crypto Mitch NL. And also you can find me on YouTube and Instagram, where I'm putting out content on almost on a daily basis. And it's all under the nickname Crypto Mitch NL.
I respect anybody in the space that puts out content, and you put out a lot of content. Much appreciation. So, brother, thank you so much for coming on the program. I really appreciate it.
Thank you very much, and good luck with the show.
You've been listening to the Big Dawg Crypto Podcast. Follow on Twitter at WoofBigDawg. Woof, Big DAWG. And run faster than the competition. Woof, woof.